Okay. Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Paul Binnion, Chief Revenue Officer at Hanlon Investment Management. Paul, it's great to see you again. Welcome back to Trade Talks.
Thank you, Jill. Good to be here.
All right, let's talk about integrated income planning for 100 million Americans that are 50 years of age or older. I mean, it really is a priority right now, is trying to find income somewhere.
It is. Let's start with the fact that there's 100 million, so 1/3 of all Americans are over the age of 50. So I don't want to get into this segue conversation, but Japan was the last country I know that looked like this kind of aging population, and we know what happened to their market. More importantly for us is you've got 100 million people who are probably getting into that danger zone, what they call the death zone in mountain climbing, of truly not being prepared for retirement. We've seen government statistics about how unprepared we are financially. Those of us who aren't prepared are not prepared typically because they don't have anything written and personal like an income plan. Many have financial plans. Many have just relied on the market growing at 15% multiples every year. The reality is if you don't have a plan, you run the risk of failing. And when you're 70, it's going to be too late to repair that.
And Paul, let's talk about fee-based advice and money management in today's day and age. We have online brokers, of course. We now have apps that make it more independent, if you will. But when you're at this particular age bracket and you are getting close to retirement and so forth, what's the importance of having a planner working with you?
Let's say it's paramount, crucial. Not having one is dangerous. Not having a plan means you're making it up. And one of the things we talk to clients about, Jill, is we are blessed. If you're 50 or 60 years old, you've been blessed living in the 4 decades of the most vibrant time in U.S. stock market history. More wealth, more millionaires have been created. So let's not confuse getting lucky because you were born at the right time to being in a situation that you can control. So one, fee-based advice is nothing new. It's the new normal. But a lot of things are fee-based, but not necessarily advisory. Okay, because a lot of product has become fee-based too. So we're talking about advice that's fee-based, advice that's personal, advice that's intimate, advice that basically relates money to a plan, money to the legacy of those assets. And by the way, let's throw into this whole mix, this whole Reg BI, which is obviously a Department of Labor initiative, which is best interest, making sure. By the way, if you're a fiduciary, which advisors are, and we are at Hanlon, you already are following this, but this is an additional layer of scrutiny and or expectation, cost, benefit. So we would question that, is fee-based advice cost effective? We would basically question, is it basically personalized or is it too generic at this point? And so we do look at those things, and it's only going to get more involved. And so our advice to advisors and firms is let's do something now. Let's not wait.
And Paul, let's talk about next generation TAMs, TAMPS, and what they offer.
Yeah, so let's define what a TAMP is. It's a turnkey asset management provider. It's basically, it's the new Walmart. It's a place you go and you can shop and for investment advice, typically money management, different styles, different products and whatnot. The next generation isn't necessarily who's bigger, Envestnet being a major player in this space. It's really, what are you offering in this TAMP? And what we want to do at Hanlon is we want to marry the execution of money management to the planning around that money management. So one of the things we do is, we don't require it, but we certainly recommend it, is we want everyone to have a written personal income plan. It's hard to execute what you don't design. Architects won't do it. Builders can't do it by law. Doctors can't prescribe what they don't diagnose. For some reason in our industry, we're allowed to recommend without actually planning and analyzing. So our TAMP at Hanlon is one where we analyze need, we do case design, we do case management, we help design things, we private label it so it looks like the advisor is intimately involved with it. And then when we actually go to the investment recommendation side, we actually are doing this with a very educated and intelligent, thoughtful process, as opposed to just, well, stocks have done well, let's just have 50% because you're 60 years old. That old style, very cliche, cookie cutter isn't going to do well for an audience that has created the kind of wealth this audience has created.
All right, Paul, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.